Business and ethics. These are two terms that the general populace will probably agree contradict one another and are constantly in conflict with one another. Anybody who follows the news probably knows this, as we are constantly reminded of unethical business practices that certain corporations get away with on a day-to-day basis. But despite all this, there's a new trend emerging, which is what is referred to as SRI investing, or socially responsible investing. This term is used interchangeably with a few others, such as ethical investing, sustainable investing, or impact investing, to name a few. The idea behind this is that you can invest in companies or in industries that promote good and that do good. Invest in a better world is the idea. So how does it work? Well, there are a few approaches you can take. Companies and funds that are in the SRI category can take the approach of the green or environmental initiative. These are companies that try to minimize their carbon footprint. These are companies that look for sustainable ways to use energy. Or you can take the socially conscious approach, where certain investment funds select companies that have fair labor practices, or that promote human rights, or that can take the approach of gender, where they ensure that there are women on their board of directors, and that they support LGBTQ and minorities. As you can see, the strategy or the direction behind SRI can be quite broad, and there are a number of issues that are being tackled. We live in a world now where people are more informed. The democratization of information, some would call it, has led to the rise of the conscious consumer. Consumers nowadays are more conscious on everything that's happening around them, and therefore they buy goods and services from companies that align with their views. You see this in the grocery store, for example, with free-run chickens. With the conscious consumer and the democratization of information, it also means public accountability for companies, and now companies are more conscious of the actions they take. Because the likelihood of unethical behavior going viral on social media or someone figuring it out is much higher in today's world. These factors mentioned are leading to the growth and fueling this idea. Millennials in particular are especially interested in impact investing. According to Morgan Stanley, investors in the 20s and 30s are now twice as likely, compared to the general investor population, to focus on SRI investing. As millennials do tend to be more tech savvy and social media oriented, this does seem to make sense. However way you want to cut the cake, the reality is this trend is growing quite impressively. In Europe, for example, responsible investing grew from 2012 at $252 billion of assets under management to 496 in 2018. And with that, the quantity of funds that track these trends and that sell these products to investors has grown from 1,584 funds in 2012 to 2,816 in 2018. Again, quite an impressive rate of growth. According to Wealthsimple, 1/4 of their clients invest in some sort of a SRI portfolio, and that it's estimated about $22 trillion in assets worldwide are now SRI funds. One big factor as to why this industry is expected to grow is the same reason it emerged to prominence in the first place: millennials. Millennials are getting their act together and getting the ball rolling in terms of their careers. Their purchasing power and their wealth is expected to grow. In fact, by 2030, it is estimated millennials will have 5 times as much wealth as they do today. Given their interest in this industry, as their wealth and purchasing power is expected to grow, so too will the quantity of funds that are allocated towards these types of investments. And that is a big growth driver going forward. I'd like to conclude this video by leaving you with 3 investment funds that predicate around the topic that we discussed today. Number 1 is Vanguard FTSE Social Index, which excludes alcohol and tobacco stocks and has a stock screener for workplace diversity and no human rights violations. Number 2, the iShares MSCI Low Carbon Target ETF. This is an environmental friendly ETF. And number 3 is SPDR Gender Diversity ETF. This is an ETF that invests in companies that have a greater number of women on their board of directors relative to their peers. We want to thank you guys for listening. Give us a like, comment, and subscribe to support the channel, and we'll see you next time.